Welcome to this Killik Explains Finance video. This week, a topical one. We're at the end of November 2018 as I'm talking. Why is the city unhappy about the Brexit deal? And it's unhappy because I'm going to argue it's not Remain, it's not Brexit, it's something in the middle, but that something is not very well defined and has a few drawbacks. So let's take a look at it right now. This is not a political video, let's take a look at it from the city's perspective. Now the background to this is what? Well, Britain leaves the EU, as far as I can tell at this point, on the 29th of March 2019. Some sort of withdrawal period looks likely, although I can't promise that. A no-deal Brexit could upset the apple cart, but let's say some kind of transition period is likely after that. So, how will this affect? This is the big question for the city, if you like. How is this going to affect, whatever deal is done, our access in London to EU markets and consumers? That's the big question. Now, why are we worrying about the city? You might say it's a bit biased, isn't it? Well, the city is really important. So basically, there are clearly, there's loads of other industries that got all this out, but the city matters. Financial services, around 12% of UK output, and a huge chunk of tax revenue comes from the city in the UK. The EU is our closest large trading bloc. Like it or not, it's much more proximate than America, much more proximate than the Far East, and we do a lot of trade there. London dominates, in fact, in certain areas. So EU-originated derivatives transactions are actually cleared and settled, the plumbing bit, if you like, in London. So lots of people watching this space, thinking what's going to happen next. Now, what are the post-Brexit options? There are three possibilities, all right? I want to cover them now. So you could, if you were a large bank, for example, say, I'm not taking a chance on the politicians, I am going to set up fully blown subsidiaries in Germany, in France, in Italy, and so on. Get them regulated locally, get all the capital set up locally, move my staff from London to Paris to Frankfurt, have done with it, and have them regulated like French firms in France or German firms in Germany. But that takes a lot of time and hassle, and you've got to talk your staff into moving, get new premises and so on. It's not exactly the perfect solution. So, for years, the EEA, that's a wide definition of Europe that includes Norway, Iceland and Liechtenstein, has been running a passport scheme, which basically says you can do all the stuff you would have done in that box, but a lot quicker, a lot less hassle. Now, problem is we don't qualify for a passport, potentially, under the current version of the deal on the table. So that would leave us having to strike a deal called Equivalence, sounds horrible, I'll cover it in a moment, like the US, Canada and Japan, when they've wanted to do major bits of trade with the EU, access its customers and so on. But if you're thinking, well, that sounds pretty similar to the other one in the middle, it's not. So, when in Rome, I've called option one. Let's take each one in turn. When in Rome, this is option one. So, firms could say, and some of them have done this, by the way, so there are banks that have set up fully blown operations in Germany with staff, premises, all the rest of it. You could physically relocate your operations inside the EU. Then it won't matter, because in theory, you are as good for business as a local firm. But it takes time, it's expensive, your staff may not want to relocate, finding premises can be a problem, the infrastructure's not there, some would argue, in places like Paris and Frankfurt, without getting into the politics of it. So, and to add to that, there are capital requirements imposed which are not like the UK's. So for any number of reasons, firms have sort of said in the past, well, if we don't need to do that, we won't. We'll bring a passport. Now, the passport scheme was created in principle to say, well, hang on a minute, if you're a member of this club, the European Economic Area, that's the EU plus Norway, Iceland, Liechtenstein, you shouldn't have to physically set up mini-EUs all over Europe to access the EU's customers, because we're all one big happy family. So, you get one authorisation in the UK, I've covered this in more detail in other videos, so keep it quick. One authorisation in the UK as a UK bank, and then you just parachute in, passport in branches all around Europe. You don't have to have massive infrastructure out there necessarily, but you can access the single market. You can access customers, markets and so on. But the problem is we are not going to stay a member of the single market, it would seem, as I stand here talking now. We are not going to be Norway light, apparently, and that means the passport scheme is no longer available. And the EU have made that fairly clear. Now, some people in the city are saying, what's wrong with being like Norway? So a member of the EEA. Well, EEA membership comes with single market access. One of the, that's the good news. You get access to the single market without establishing all those different operating subsidiaries and so on. But you have to accept the rules of the club. And the EU's four pillars include the free movement of labour. That's something Theresa May said we can't sign up for. And disputes are still determined by the EU courts, ultimately trade disputes and so on. And that's another thing that apparently we would not be comfortable with. So that leaves you with equivalence. Now, if you think that sounds like a good word, equivalence sounds like equality, no. So this is not solution 1, not solution 2, it's something else. What is it? Basically, the EU, under Equivalence, says we agree that the UK's rules have similar outcomes for consumers as ours. Big surprise, you've been in the same club for years, you'd think that must be the case. So, an equivalent agreement is struck, allowing access to EU markets. Anyway, this is sounding hopeful. Okay, sounds promising. There are several problems. This is not the same as a passport scheme. Equivalence is not equality. All right, so the two words might sound similar, but they mean different things. And it's the one on the left that we're being offered, if you like. So what's the problem here? What's going on? So it's an EU concept. All right, it's not World Trading Organization rules as applied by the Americans, for example. Hence, Trump's recent intervention has its own definitions, processes, and timetables. So some people have said, if we go to equivalence and abandon the passport scheme, how long is that going to take? All right. Under the current equivalence rules, the EU has the right to retain control to a degree. It can cancel or amend its deal with you at effectively 30 days notice. And a lot of banks have said that's madness. How can we plan if one side of this deal can just back out at 30 days notice? And probably more important, it doesn't cover all the areas of the existing passport scheme. So what does it cover? The ins and outs, I've called this slide. So in other words, deals have been done on this basis in the past, these activities, investment banking and most insurance activities. So quite a bit of what the city does, including that derivatives plumbing stuff, should be it. But retail banking isn't. And retail banking covers huge areas of important activity. Deposit taking, mortgages, commercial loans or reassurance. So those deals, equivalence deals, would have to be set up from scratch. And that took, by the way, 4 years when the EU was dealing with Chicago. So you've got to hope they'll be a bit quicker than that this time. All right, and basically that's one of the concerns. You know, how long is this going to take? We've never done this before. Is it going to work? And so on. So what does the city want? Well, they have pushed for a wider mutual recognition agreement that just says something a bit less one-sided, all right, and something the EU can't just back out of at short notice, something a bit more secure. The EU believe that's letting us have our cake and eat it. They think that's letting us leave the club but still get the benefits with none of the rules. So the city is pushing for a more clear version of equivalence, something that's a little bit less one-sided and also has a bit more clarity around timing and how we're actually going to get these agreements into place. In conclusion, therefore, it's the politics stupid. There is a lot of brinksmanship going on as I make this video, end of November 2018. So the EU is reluctant to offer the UK special terms. It's saying you're either in the club or a version of the club like the EEA or you're not. All right, but the one bargaining chip that London can and is using is to say, well, hang on a minute, you're talking as though all that matters is London's access to the EU markets and consumers, when actually, from your point of view, the EU, an important part of the equation is your access to our markets, ways of doing things, and consumers. So there's as much to lose for you as there is for us. There you have it. Things can change any time, but editor@killik.com with queries, and to watch videos on some of the stuff I went through quite quickly here, killik.com/learn.